I'm Steve Bowles, I'm from the PLSA DC Council. I'm just going to chair this session, so you won't be hearing too much from me this afternoon. With me, we've got two well-known industry participants to discuss this issue of pensions fraud. Firstly, we've got Ian Bell, who's head of RSM's pension group, and Ian's been at the sharp end of supporting trustees with governance and risk management over the last 25 years. We've also got Martin Mannion. Martin's currently head of trustee services at John Lewis, and his previous role was at GSK as director of finance and risk for all of their UK pension schemes. So I think we've got two people who are pretty knowledgeable about this whole area of risk management and will be providing their views on pensions fraud. Now, I think it's probably fair to say that actually it's pension scams in particular that have dominated the headlines, certainly this year since pension liberation. And there was some research earlier this year by the Citizens Advice Bureau where they identified that 9 out of 10 of us were failing to spot, failing a fraud test that they did with a number of individuals. And the conclusion from that is that we all suffer from a huge degree of overconfidence in our ability to spot fraud. As we're going to hear from Ian and Martin, however, fraud in pensions is not limited to pensions scams. Fraud is a much bigger issue than that. We know that recent judgments, such as the Royal London, are perhaps limiting the discretion of trustees in this space. And so I think we're going to be examining some of the areas that trustees are going to need to focus on. Just before I hand you over, though, to the session, we've got a question for you. So trying to identify your views on fraud and whether it affects you and your scheme. So I don't know if we could, we've got the question up here. So I don't know if you can have a think about that. So the question is essentially that I think that the schemes I am involved with have sufficient controls in place to protect members from the risk of fraud. And you're either going to agree with that statement that you do have sufficient controls, or you would disagree with it, you don't have sufficient controls, or I think there's a don't know as well. So if you could have a think about responding to that for a moment, please. But I think it does beg the question, what is the role of the trustee in all this? And what types of fraud is it that pension scheme trustees need to be considering? So as we look at the results as they start to come in, there's a slight bias there towards schemes believing they have this issue ostensibly under control. There is clearly a sizable minority that think that's not the case, but I think that's probably going to be interesting viewing as we go through the presentation, and we'll be asking a similar question, I think, towards the end. But at this point, what I'm going to do is I'll hand over to Ian and Martin to explore this issue, and I think we've also got a number of pretty stark examples in here as well. So over to the chaps.
Okay. Thanks, Steve. Just looking at those statistics coming in, so around 2/3 of you think you've got this issue cracked and you've got sufficient controls in place, and maybe a third recognise it's an area that you need to spend some more time on, and then there's some that really don't know the answer. So as Steve says, we'll revisit this later on in the session and maybe close that voting now on those statistics, so 60%. So what are we going to cover today in terms of today's agenda? We will look at whether fraud really is an issue for the pensions world, and then look at 3 areas in particular detail. So cyber specifically, and spend some time looking at that today, then leading on to identity theft, and then lastly liberation. So 3 areas in detail, and Martin will be helping me in those areas and giving you some specific examples of what has happened. And then obviously take some questions at the end, and we might get some questions over the web as well, which is great. So let's kick off, and let's firstly ask the question, is fraud really an issue? Well, as these headlines show, it is happening. From the pensions world, these are headlines taken of scams that have happened at points of time in the past. Now, I think if you look at any aspect of the press, not just pensions press, you'll see details of fraud happening on a fairly regular basis these days. It's a regular occurrence. And with hindsight, the question you always have to ask in situations like this is, were the controls in place really fit for purpose? How did these things happen? And with hindsight, it's easy. You can see how they happened. But the point really is, were the controls in place to stop them in the first place? And as we go through today's session, we will be highlighting some areas that you can give some thought to. From a regulatory perspective, only last month, Leslie Titcombe put out this particular quote around the issue of cyber. And this clearly demonstrates their thinking that actually from a pensions perspective, we as an industry are very much behind the curve when it comes to cyber and cyber protection. So that's why we're going to look at that in some detail later. And I think when you think about cyber, ID theft, loss of data, loss of financial assets, clearly that's what it can create. And the important thing, again, as Leslie points out here, trustees, any trustees in the room, you're the guys that are responsible in terms of putting the controls in place around cyber, and indeed around all fraud aspects of your pension schemes. And also, you need to be thinking about what your third parties are doing. They hold a lot of your data for you. What do they do in terms of cyber protection? So that's why we'll pick up on that and pick up on some of Leslie's comments again later. But what else do we know from the pensions world? Well, at RSM, this is something we've been looking at for some years now. Started our first survey on a subject back in 2009, and we put our fourth one out at the start of this year. And I've got some copies down here. If any of you haven't seen that yet, you can certainly take one of those away after this session. And also, we're starting our latest survey, and I've launched it at this event. So if you haven't gone past the RSM stand yet and completed one of our surveys, again, I've got some copies down here. I'd be very grateful if you could fill those in. Now, what we're trying to do here is raise awareness of fraud as a risk, and particularly a risk, obviously, for the pensions industry. And I'd like to start today by looking at some of the highlights from our survey that we did, the last one we did and launched at the start of this year. So in terms of the highlights from that survey, 6 areas. Is fraud on the increase? Well, when we compared it to the results we had in our 2013 survey, yes, it is. Perhaps not surprising. In any economically difficult period, fraud will always increase. But this is quite a large jump. Now, in terms of where that's coming from, we'll look at it in a moment. But the real key here is that it is increasing, the trend is going against us, and as an industry we need to be aware of it and start to think in more detail about the controls we've got in place to prevent it.
What does that percentage mean? 37%? Is that growth?
37% of respondents said that fraud had occurred in their scheme in the last 12 months. What type of fraud then? Again, maybe not surprising. Around member transactions specifically, 55%. And this, bearing in mind this surveys of DB and DC schemes, a classic fraud in any DB scheme is around dead pensioners, relatives continuing to claim a pension after the real member has deceased. Also transfers quite high there in terms of 22%. Well, that would be liberation type fraud. Again, an area we're all quite aware of now and clearly showing in the survey results. But what concerns me more are some of the other aspects, some of the smaller parts on this pie chart. I think actually these are the areas where, particularly around member data and IT systems, maybe investment transactions, for the future, yes, in terms of respondents to date, it's been shown at quite a low level. But I would predict going forward, those are the areas we need to be very careful about.
What do you mean by investment transactions?
Investment transactions in terms of investment manager transactions, custodian type transactions, things happening that they shouldn't happen, investment charges, perhaps DC type transactions that aren't being handled properly, perhaps deliberately to the benefit of the investment provider. There could be a number of different areas, but that was the results. And it was a low level. Whether that will change going forward, we shall see. Now, I mentioned earlier, in terms of whose responsibility is fraud prevention, it does sit, I'm afraid, with the trustees. As Leslie Titcombe said in her quote, this is their responsibility. And a really alarming statistic from our survey was that 26% of our survey respondents who were trustees didn't recognise that responsibility. It's all about the controls you put in place to prevent it, and as trustees, you need to be on top of this issue, and I think increasingly on top of this issue. In terms of ID checks, what are you currently doing as schemes to make sure that you're dealing with the right members when they come to claim your benefits? Now, of our survey respondents last time round, just under half haven't actually reviewed this area. Now, when we come on to look at cybercrime a bit later in this session, this is quite vital. And I would say that if you are currently still just using birth certificates or marriage certificates to prove someone's ID, I don't think that's fit for purpose in this day and age. And in terms of the controls that you've got as a scheme or at your third-party administrators, if that's all you're doing at the moment, I think there's something to be done there. So again, an area to think about, and half of our respondents hadn't actually thought about that yet. In terms of fraud prevention, internal controls clearly are vital. The regulator, in their code of practice, says that schemes should be testing their internal controls at least on an annual basis. Is that happening in your scheme? If it isn't, how do you know those controls will actually work to prevent a risk from actually happening? So again, fairly alarming, and I think the way to think about this, similar to a smoke alarm in your homes. You will get some assurance from having that smoke alarm, and occasionally you'll walk past it and see the test button, and you'll press it, and you'll hear the sharp noise, and actually that gives you reassurance it is going to work. In terms of internal controls, it's a similar way to think. That's what you should be doing with the controls in place through your risk register. And the last thing to highlight from our last time's survey, training for trustee boards. This is actually a positive trend. This is demonstrating that trustees were saying, actually, we are getting more training in this particular area. So we are able to ask the right questions of ourselves and of our providers. So those were highlights from last time's survey, and as I said earlier, we are doing another one, and be very grateful for any input that you'd like to put into that, and please take a copy of the survey as you leave today. But now to look at some of these areas in a bit more detail, and we'll start with cyber. And I think when we're going through this, whilst we're looking at pensions today, cyber affects everybody. It will affect you all as individuals, it will affect the organisations you work for, as well as the pension schemes that you represent. So as we're going through this, you can think about it in those three areas, certainly. And as I said, fraud is on the increase generally. That's what our survey certainly showed. But in terms of cyber, some commentators will now say this is at pandemic level. This is an area of huge, huge growth. And everybody, whatever walk of life you're in, needs to be very aware of the risks that are now out there. For the first time, in August this year, the UK crime statistics actually included cyber incidences in the crime stats. For the year to date, that meant the crime stats actually doubled. So they went up by 100% just by the inclusion of cyber crime incidents. So you now basically have the same probability of being affected by a cyber incident as you have by being burgled, mugged, any other form of physical crime. That's the level it's at, and perhaps we'll come on to why in a few moments. But what actually is it? There are several definitions out there. This is a fairly old one, but actually it sums it up quite nicely, because with cyber, it's actually a very wide-ranging area. What could it mean? What is the actual risk? It could lead to financial loss, certainly could lead to disruption of your systems. If it does happen, huge damage to reputation, and I think on that particular aspect, perhaps that's why some of the statistics aren't actually there, because people will mask or try and hide incidents when they do occur. But overall, it's some failure in your IT systems, and it's caused by an outside influence for their own purposes, whether it be a bit of fun or actually to get some financial gain. So it is a huge area, and from a criminal's perspective, why would they rob a bank physically if they can do it from the comfort of their own home? No need for sawn-off shotguns, no need for stockings over their heads. They can do it from the comfort of their own home. So why wouldn't criminals start to use this as a form of financial gain as opposed to anything more risky? And I think if we go back in time, it was all around computer geeks, I guess, people having a bit of fun because they could. And you might end up with situations like this, a real incident actually in Middlesbrough where the traffic management system was hacked. And they're just doing it for a bit of fun, putting up signs on the motorway, something like that, or something like that. Don't know if anyone's here from Teesside, don't want to offend anybody, don't know if they had a real point there. Or something like this, which is Japan. A building management system hacked. And what they did was play a game of Tetris by using the lighting system. Again, just a bit of fun. But it wouldn't be fun if they're able to hack the management system that controls this power plant. And that's where cyber terrorism starts to become a very, very real risk. And why is it increasing? Basically, because the technical knowledge required to actually hack a system is actually reducing, if you look back in time, and the availability of the tools and techniques to perform that hack are increasing all the time. That magazine cover, Learn to Hack, is a real magazine. If you want to read that, you can obtain that magazine. And with that magazine will come all the tools and tips and techniques. The other screenshot, just like a Microsoft product, is a product that will take you through how to hack into someone's system. That's how easy it has become. That's why criminals, fraudsters will start to use cyber in more ways in the future. And in terms of the current trends, what is actually happening? Well, the top three here, ransomware, effectively kidnapping, but kidnapping someone's IT system, preventing their access to their IT system. Increasingly common. Again, not something that's widely publicised when it happens, and I'm sure people are paying ransom demands in bitcoins, untraceable, to actually get their systems back. So that's the top three. The fourth one, you'll all have heard of phishing. All very, something going around maybe 10 years ago. The emails you could spot, really obvious. Someone wanted to extract some money from their family in Africa or wherever it might be. Now we've moved on to whaling. And this is actually a better form of phishing, and it's where the organised crime syndicate will target particular people in an organisation at a senior level, target the whole board of directors to try and get information from them at that level that they can then use to get into that organisation and use it for their own benefit. You also see fraudsters actually playing, and Martin's got an example later, actually playing the long game in terms of getting access to someone's system, being prepared to put someone into an organisation with the sole purpose of getting access to their systems at a later date. And then lastly, and very important from a pensions perspective, third-party risks. So in terms of your cyber footprint, in terms of your scheme's cyber footprint, how wide actually is that? Where is your data kept? And what controls are there over that data? So monitoring that cyber footprint from your perspective, from a scheme perspective, increasingly important. And the challenges from a trustee perspective, I won't go through these in detail, but the one point that perhaps many people won't realise, top right, which I've circled, or put a line around anyway, to actually successfully hack a system, 95% of all successful hacks will involve some human intervention. It isn't purely computer to computer. There will be a human being involved, someone that's actually opened the door, someone that's given away their password, someone that's pressed the wrong button on an email, someone that's allowed the fraudster, the cyber criminal, into your system. 95% of successful hacks rely on a human being's involvement. Not that they would know at the time, because they'll probably do something quite innocently. And we'll come back to the sort of controls perhaps that can be in place around that. And some commentators will also say that there are two types of organisations now. There are those that have been hacked and they know about it, and there are those that have been hacked and they don't yet know. That's how widespread this particular issue is. And from a pension scheme perspective, something to be aware of. So the challenges continue, and the risks for pension schemes. As I've just mentioned, in terms of the involvement of people, it's key here. So in terms of people that work on your particular schemes, whether it's internally, whether it's at the employer, whether it's at the third-party administrator, you've got to be thinking about what risks actually are there in those areas. Is there a complacency from a scheme perspective because it's all outsourced to a TPA? And what controls, therefore, are at that TPA in terms of employment of individuals, and then what those individuals can do on their systems? What are they doing? And in terms of the results, what could happen if it goes wrong? Data loss, clearly. And cyber is all about data. The initial hack will be just to obtain data. What do pension schemes hold? Reams and reams and reams of personal data. Very valuable personal data. So losing that data is certainly not something you want to do. Loss of reputation, absolutely. Data Protection Act, obviously, because it's something you should be controlling better. But it's the loss of that confidential information that, as Martin will touch on in a moment, has a value on the dark web, and that's what the hackers are after, because they can sell it on to the person that will take it to the next stage to use that data to try and extract some financial gain. So Martin, what examples have we got?
Yeah, very briefly. If you try and search for any examples of UK cybercrime in pension schemes, you will find very little. They're very international ones, you can see. So the famous ones, the Japan scheme, the state scheme had 1.25 million records taken. You've had various US police boards with funds taken. There's an entire state scheme, a fairly small scheme, Donetsk, but had its entire state scheme data wiped during a dispute with a neighbouring state. So it's around there. It's an oddity, actually, because if in the UK no data is being stolen, why can you go on the dark web and buy pension data at 5p a go? There are organisations out there, if you talk to the banks, Russia, China, places like this, Blue Tile, they're big organisations. They operate from commercial premises. If you wanted any schemes data here, you could go to them and they'd get it for you. And I suspect whatever you did, you wouldn't be able to do much about it. So it's a massive industry. It just one of the reasons there's less visibility around it is I think if the people who do stuff mop up after things like this have happened can actually remove any trace of publicity around it. So you believe Google is anything that has happened, you can pay to have the Google records for a minute. So I suspect we'll come back in here a few times and there's going to be a big blazing story at some stage because, there is data leakage from UK schemes. I think it's a lower level because the way you use technology, if you think about it, online access is usually pretty perfunctory. It's information only, it's administrative. You can't do on a UK online scheme what you can do on an Aussie super scheme or a US 401k. So you can't generally transact. But I think that will change because obviously with flexibility and demand, you'll end up with pension systems online that do look more like Amazon. They look like your Aussie super when you go on. And this is when the fraudsters can get in, because if they can get in there, transact, take cash away on an ad hoc basis, you'll see more crime coming through. I think in the UK we're going to have a big problem because we're building these lovely front ends in this fashion and everyone's aspiring to it and we're bolting them onto old legacy systems. We all know if you look at pension systems, they're sort of held together. They're generally started to be written 30 years ago. So I think that's probably a recipe for disaster coming forward. There's also the behaviour aspect. So you go and look up. We'll all go home and panic because we get this. I'm not going to go home and set a 14-character password with 3 random words, 2 numbers and 4 random characters and change it every week. If you insist on that on a member site, they're not going to use it. You've got to get a balance between usability and security. So I suspect in the coming months and years we're going to see some evidence of what's happened here. Probably back to you, Ian.
Okay, so what should you be thinking about in terms of what you can do around cybersecurity? It's very much tone at the top is how I would describe it. Tone at the top from the trustee board, tone at the top from the third-party administrators management. Thinking again about the people aspects. What are your expectations of them? What are the policies controlling what they can do? That's what you've got to be thinking about, and from a trustee point of view, setting that tone and asking the right questions. In terms of TPAs and use of TPAs, I'm aware of one TPA certainly that they have a policy of sending a random email around once a month. And it is an attempt at a classic cyber attempt just to see how many of their employees will still click on the button. And of course then following it up for the ones that have clicked. That's a good control. But are you happy that your administrators are on top of it to that extent? Because that's what it should be taking now to make sure that incidences aren't going to happen in the future. And in terms of concluding on here, the thing to remember, it's all about the worth of your data. That's why this is an area you need to be thinking about. Your data is very, very valuable. Maybe the fraudsters haven't woken up to it totally yet, but I'm sure that will come. Think about what good cyber resilience means to you as a scheme. What are your expectations? What are your expectations of others? Engage staff in the process, whether it's at the TPAs or internally, to make sure everyone's aware of what the risks are. And don't think about basic controls either. You know, Martin's just mentioned about long passwords. We all hate those long passwords. But that's potentially where we're heading towards, because that's what it will take in the future to stop breaches happening. And then if the worst thing happens, if there is a breach, what will you do about it? Because if it does happen, you're going to have to react pretty quickly. So what will you do at that point in time? And establishing that now will certainly help you if the worst thing happens in the future. So cyber is certainly a very real risk and an increasing risk, and something for you all to think about. Moving on to the next area we want to look at, ID theft. What are we talking about here? What do you do as schemes when a member contacts you? Particularly maybe for legacy type arrangements where you don't know all the members anymore. They're long since deferred and you might not have lost personal contact with them. How do you know? How do your administrators know you're dealing with the right person? When I phone up to start the process of claiming my benefits, how do you know you're dealing with me? I know if I phone up my mobile phone provider and ask to make a change, I get asked at least 5 questions to prove that I am Ian Bell. I wonder if your scheme members get asked that level of detail to prevent someone like this chap phoning up pretending to be me. He's actually a manager in our London office, he's a nice guy. But it might not be, and that's the point. How do you know you're dealing with the right person? So ID theft, in terms of some of the facts, again, a huge growth area. The latest statistics out comparing 2014 to 2015, 57% increase. Why is it growing at this level? Well, actually, we're all very prepared to put a lot of personal information on the internet through Twitter, through LinkedIn, through Facebook. That means through social engineering, a determined fraudster can find out an awful lot about any of us just by going online, and then can use that to actually perpetrate an ID fraud. There's also a gender imbalance. Typically, men are more hit by this area than women. And the most common target group, aged between 50 and 59. So the fraudsters have worked out, actually, if they're going to get some value back from all this investment of time on their behalf, what target market should we aim for? Men aged 50 to 59. Classic pension drawdown period. So again, in terms of a risk from our pensions perspective, ID theft is a very real one. And the next session in this room, after this, talks about the pensions dashboard. Again, going online, a lot of personal information. So whilst that's a good thing from an industry perspective, we've got to be very careful that that doesn't open the door even more than we have currently in terms of potential ID fraud. A pension fund is a lucrative target. Martin.
Yeah, in the industry, reams of identity frauds over the years. The most common are usually pensions. You will have a proportion of pensioners claiming who are dead, etc. Trickiest one usually to deal with is minor beneficiaries. You know, are they in full-time education? They write to you, they are, but you go on the Facebook page and they're not, you know. So we always end up with these sort of conflicts as what to do. The classic one I've seen the most value go out the door has been deaths. You just, in a TPA, pick someone who's leaving anyway and pretend they've died, write the cheque and abscond with it. So that's happened a couple of times in the main press. Cold calling, we get about 3 a year where people knock on doors pretending to be the scheme. That's happened so often and worry us. What we've got a new policy. Everything we send out, absolute plain white envelope. We thought that if we can help by not flagging it to the world that they're a John Lewis, their pensioner, then that's the least we can do. But the best one I ever found, and to Ian's example of a long-term game, I chair the T Charter, so we deal with disputes over transitions, of which there are many. And it was a Far East scheme about 18 years ago. And they phoned up just to take me through what had happened. A big transition, 3 billion, something of that nature. And the problem with these, they had all the vendors were picked, all the parties were perfect, the process was documented, the sign-offs, everything was there you could humanly think of. Transitions, as you know, it happens quickly, it's high value, you've got complexity, you're going to do multi-time, you're going to do multi-currency. You have a plan, but it won't happen exactly as per the plan. And as I say, you end up with having to do things quickly that you're unfamiliar with. So perfect scam. An external criminal organisation has planted a person in there with a false identity. They get to the end of the transition. There's the final residual sweep up. It's 100 million plus. they put a series of payments through to a bank account. It's not the right one. Small ones just to test it's going through. They've amended the bank mandate. It's there. They've amended the plan. They get them £1 million sweep up pay. They've got the facts to go. The bank account is theirs, not the correct one. But it's established because the person checking is saying, well, I'm paying it to the bank account I've just paid these various other things to. That's settled. They've got confirmation, forged back. So they're getting this crime embedded. The thing that stopped that cash going out the door, and it was the last second, was a classic error you make. If you know anything about transitions, you know that the number at the end that you sweep up isn't what the plan says, and they'd use the number on the plan. This person said, no, that can't happen. Made one phone call, payment stopped, person disappeared, and they almost had got away with the 120 million. If any event, once the cash is gone, it's very hard to get a large amount back, because you've instructed it. So I would just say, do watch for the long game, because again, that's an example where people can be good and positive in terms of controls as well as being a source of risk.
So what can you do in terms of ID theft? What controls can you put in place? You can't control what your members do. You can't control what they do on Twitter, LinkedIn, Facebook, etc. You can't stop them doing that. But what you can do is not make it any worse. What you can do in terms of information that you use as a scheme, basic controls in terms of shredding. I think most of you wouldn't dream of putting a bank statement or anything like that in your bin these days. But that needs to be a control within your organisations and certainly at the TPA. Focusing on common data. Difficult to keep up to date in terms of addresses, things like that. But again, if someone does move house, another common starting point for ID fraud is when that letter arrives, someone's moved on, and it just falls into the wrong hands. So trying to keep that data up to date and not allowing that to happen, clearly key. Don't give away too much on scheme websites, particularly around personal member data, because that can be used against them. If you're paying out using payslips, what information is on that payslip? Often these payslips go out and they look like payslips. You see them in the post, you know they're a payslip. Why is an NIC number on there? It doesn't need to be on there. No requirement for it to be there, so why should it be there? Just restrict the personal data that could, by chance, fall into the wrong hands. And as I said earlier, in terms of requesting the right level of detail from members when they come to claim a benefit from the scheme, increase the controls in that particular area. I know some TPAs have done this, which is great. I think others haven't yet. And in-house schemes perhaps haven't yet. I know it makes the process a bit more painful at the outset and maybe a bit more painful from a member point of view. But if I'm phoning up to change my mobile phone contract and it takes me a long time to get through, if I'm then phoning up to claim my pension benefit, maybe one of the biggest assets that I'll accumulate in my lifetime, I'd expect to be asked the same level of detailed questions. So something to think about in terms of ID theft. So the last area now, liberation. And this is something that's been with us as an industry for some time. And when we did our last survey, actually, we asked the question, well, in terms of freedom and choice, as an industry, what did we think? What do we think? Is that a scammer's charter? Did that make life easier for the fraudster? At the time of our last survey, difficult to tell. There was a slight blip in terms of transfer requests after freedom and choice. Doesn't necessarily mean they're all fraudulent by any stretch. But it did make life a lot easier if you stop and think about it. Now someone could phone someone up, cold call them, and say, actually, the government are saying this is great news. You can transfer your pension pot. You can get your hands on it earlier and use the new regulations to their own benefit. So, in our view, yes, freedom and choice did give the fraudster that added advantage to get their hands on members' money, whether it's through fees or through putting it into investments that really they shouldn't go anywhere near. And then you've got things like Royal London, as Steve mentioned earlier. That doesn't really help the trustees, does it? It doesn't really help you to perhaps help members to stop doing something very foolish with their lifetime savings. So it's a well-known issue. And if we look at some recent quote from TPAS, Michelle Cracknell, she says here, look, it's good. Awareness is up about this issue. We've had the Panorama documentaries, we've had various shows on telly or on radio. In fact, I've been on one on radio. That actually demonstrates that members are far more aware than they ever were when they get one of these calls, that maybe they shouldn't be going anywhere near it. But the fact is they're still happening. It's not gone away totally. And from a fraudster's perspective, they will keep going with this until our controls as an industry are such that it's no fun anymore and it's too hard work. but they'll keep going until that happens. So we've got to keep the awareness up and make sure that we're helping members not to do something very foolish. Martin.
Most serendipitous conversation about 2 hours ago on this matter. As an attendee at this meeting I was speaking to, said they'd received a phone call whilst travelling here on the train. This person on the other end of the line had offered to release their pension early. They could find a way of doing it prior to 50, and sort of started to relay the details. The person who told me that was Leslie Titcombe, the chief executive of the regulator. So she's getting phone calls to try and liberate her FCA pension. So I think they're stepping into the den here.
She signed up.
Possibly not. I think they got. It is infuriating when you work on pension schemes to get one of these scams. There's endless debates about what is a scam. Every one of them stinks to high heaven. Everything's wrong. If I could take you through 20 of the many I've received, they're always a desperate circumstances, and all those things you read. It's mobile only. It's personal address. The company's been around 5 minutes. Mysterious reasons your 63-year-old's taking a job 400 miles away. The greatest mystery, and that employer has created an occupational trust-based DC scheme. Well, I suspect if you find how many legitimate ones have been created in the last 2 years, it'll be in single digits. If you had any other bit of business and that level of fraudulence or of evidence is there, you wouldn't do it. So definitely John Lear's the partnership with his attitude, we do not pay out, we will go and see the person. We've taken it one step further, and this is aside from all the various announcements as to what one is ought to do. We've taken one step further. We're on the verge of actually becoming regulated ourselves, because one of the issues is you're dealing with, if you could issue regulated advice, you could help do this, and do it as a matter of course to not do this. Because if you look at the commerciality of the liberation scams, they are ridiculous. A £5 a year pension, and they're swapping it for a lump sum of £7,000. And they're not even getting that. So I think hopefully we'll see a lot of strengthening how you do it, but I think a lot of people are pursuing a personal agenda of never paying these people, which I think is good of them.
So a lot of this will be familiar with you in terms of what you should be doing. You will all, as schemes, have checklists that you'll be completing when these transfer requests come in. Importantly, keep those up to date in terms of registered schemes, etc. The scheme name, I know there's one fraud that's been perpetrated, and several third-party administrators have been caught by it because the fraudsters set up a scheme with a very slight difference in the name to one that was registered with the HMRC. So when people checked it a bit too quickly, they thought, okay, it's on the list, that's fine, it can go. Several TPAs got caught out by that. And if there's any doubt in terms of making the transfer, you can apply for that extension, 6-month extension from the TPR. And that will perhaps help the member to think a bit harder about what they're prepared and what they're about to do. Member awareness, we've got to keep this up. I think there was a real flurry of activity in this area, maybe 18 months, 2 years ago. We've got to make sure we're keeping the awareness up from a member perspective. The Scorpion booklet is still there to be used, and I'm sure many of your schemes do use that. And then it's all about, as Martin is saying, following the process and involving others if you need to, whether it be TPAS, Action Fraud, or indeed the Liberation Industry Group. So, liberation, it's out there, it will still be out there until we stop it happening. So it is certainly an area from a fraud point of view we need to keep on top of. So that was the third area we're going to cover in detail. And what I'd like to do now you've heard all of that, is just vote again and see if that 60% has changed. Maybe it's gone up. Maybe you think you've done everything you need to now you've heard it. But we'll just see where the vote goes now, and then we'll take some questions, Steve. Yeah. Sure. Is that it? Is that finished? Oh.
Wow, so it's moving around, but there does seem to have been a shift.
The swingometer.
Indeed, yeah.
That's good.
So we definitely have some time for questions. Questions from the audience here, and you can do that two ways, either the traditional hand-waving way or the less traditional through the app way, and there are a couple here already. And then we've got the guys coming through on the live web streaming, and I think you can submit some questions through there as well. So I'll open it up to the floor for the sort of traditional way, and if there aren't any of those forthcoming immediately, I can go to my phone. Any questions for? Question at the back. We've got some microphones, so if you just hang on a mo, that would be fantastic. Thank you.
Hi, Jane Robson, Marks and Spencer Pensions. In terms of in the UK, I think we are quite well advanced in terms of checking whether our pensioners are still in existence. What interventions do you see for coming for overseas pensioners?
This is an area we come across a lot with our clients, actually. From an audit point of view, we ask this question. And often, the trustees or scheme management believe because they're doing maybe 100% check on the pensioner database, that they're covered. Often that's handled by the third-party administrator for them. But that 100% check will only cover UK and Ireland. So yes, the overseas pensioners, people that have retired abroad, unless when they die their body is repatriated to the UK, it won't feature on the UK data. So trustees need to be aware of any of their pensioner population that have retired overseas, and then be thinking about additional existence testing on that particular aspect of the population. Now that can be done in various ways. Often it's been done by post or getting some other confirmation that way. Again, not a very good test really, because if someone is perpetrating a fraud, they'll get something signed and they'll get it sent back. A better way to do it is through someone like a credit union branch, and Western Union I know offer this service, that they can require pensioners to go to their nearest Western Union branch, and apparently they have so many branches around the world that isn't a problem wherever people are based, and actually then present to them their ID information, whether it's passport or anything else. So that's a far better way to do it. You wouldn't want to do it every year, but certainly do it on a cyclical basis, and particularly if you have got a large element of the pensioner population that's retired overseas.
Any other questions from the room? Gentleman down the front here. You've succeeded.
Thank you. Hello. Angus Campbell from Britvic Pension. The thing I shall take out of this is you, Martin, saying that you are certain that the names of the Britvic Pension, the 7,000 people, could be bought on the dark web.
No, you could pay someone to get them.
How would you know then? So how I think I need to find out how the third-party administrator is working out how it's not going on the, because is there somebody looking on the dark web to see if they can find these things?
I think there is a personal version. I think one of the credit agencies will do a dark web search now. I don't know how you do it on a large basis, but we got information from the banks. The custodian banks have got huge cyber security, and if they go and visit these places, if you go out to Eastern Europe, you can actually go to the premises of hackers, have a meeting with them, set out the spec, and they'll put the team in front of you who are going to do it. It operates like a normal business. Bear in mind, in places like Russia, they have an issue over the legal status of it, because if it's not an attack on a Russian person, they don't see it as a crime as such. So no, I'm not saying it's on there already. What I'm saying is if someone wanted it and we were to pay the money, they could get it.
But you're right, in terms of what you should be doing is what's the third-party administrator doing to prevent that happening? What controls are in place? And I think an area I've started raising with my clients recently is in terms of the terms and conditions that you have with your TPA, when were they put in place? And if it was several years ago, I imagine cyber-type issues aren't even mentioned. So if they had a breach, it's actually a grey area whether they would have to tell you or not. And I would suggest that you would want them to tell you, so you should build that into the terms. If you want to do an audit in terms of their controls in this particular area, again, that should be covered in the terms and conditions to enable you to do it. So I think reviewing, if it's not been done for a little while, what those terms are would be very sensible.
There's a question from an audience member here, which is indicating they received a press release regarding some major cyber security flaws in the US with their Secret Service. If they can't do it, how can pension schemes? But I guess the question there is, what is the expectation of trustees? What is it reasonable to expect trustees to be doing here?
I think it's reasonable that trustees should be asking the right questions. Trustees can't control this perfectly, absolutely. But if it happens and it's something that you've not asked the right questions about, then you could be found at fault, surely.
I think it's also a matter of clarity within the trustee board. It's good to have it on your risk map, but someone needs to own it. You need some skill. You need to have an IT person there to stand up every quarter and say, these are the threats, these are the processes, these are the activities. This is what we've done. And you don't see that, do you, in any scheme, really?
And also, just to add to that, as I mentioned in my presentation, your cyber footprint, as it's called, as a pension scheme, is quite wide. You rely on a lot of advisors to help you to do what you do. So of those advisors, who's holding data and how well is it protected? And you need to understand that cyber footprint to enable you to ask the right questions of the right people. That, again, is important.
I'm reminded that about 8 or 9 years ago, there was a robbery at our advisors and computers were taken. And it ended up with the chairman of our trustees having to go and explain to the data commissioner up in Macclesfield or somewhere. So, these things happen.
Yeah, so why was the data on those computers?
Yes.
What's kept on C drives? What's the policy to prevent that happening?
There's a sort of a more detailed question here about asking what the sort of 5 checks you referred to might be, and it kind of links into a thought I had during the session, which you were talking about sort of more complicated passwords and whether they could be part of the answer. I know from personal experience, I've got about 4 different passwords. They're all relatively simple. I can't remember what any of them are, and I type in 4 repetitively into varying different sites before being kicked out. What do you think? I mean, do you have any views on what some of the answers might be here? What ID checks we could perhaps put in place, or how we might improve security around member data?
Yeah, again, it's difficult, I guess, from a pension scheme point of view. But I know if you look at some of the things that banks do, and I think it's a really good test, actually. So Barclays, I bank with, when they're proving I am who I am, they'll ask me my previous addresses, and I have some false ones in there as well. What addresses have you worked with lived in previously? That's a really good test. It might be none of the above sometimes as well. Now, as a pension scheme, you could probably do that sort of test. But I think it comes down to asking for more than one particular source of information. Because as I said, birth certificates and marriage certificates, if you lose your own birth certificate and have to go and get a replacement, I think you would be amazed when you go to your local town hall to get it, just how little you have to prove in order to get your hands on it. Equally, they're documents that are very easily forged. So just relying on those is nowhere near sufficient now. And you should be asking different questions that mean the fraudster would have to have a lot of information about the individual in order to answer those questions. My son did it. My son tried to change his mobile phone contract, which is in my name. And these questions were asked of him. And he thought, I could blag this. And he got to the third one. Well, he answered the third one of 6, I think. Got to the third one, and when the 4th one came and said, I'm really sorry, it's not Ian, it's Stuart. I'll get my dad to give you a call. So it did work. It did work.
Name?
Yeah. Yes.
Any questions from the audience? I've got one, and it kind of links to the whole fintech piece, increasing use of technology generally in pensions, and then specifically within pensions about the move to greater scale, and we've seen the pensions bill essentially trying to drive scale out. Do you think that those 2 things are partly the answer to this?
It would certainly help because it restricts the number of systems out there and enables the larger provider probably to have better controls in place. Because part of the problem again here is you've got 6,000 different systems out there potentially that are all vulnerable, and putting the controls in place for all of them is a big ask. So yes, it certainly would help in terms of scale.
Martin, as a large scheme, I mean, what's your perspective in terms of how that helps you, I guess, identify and prevent some of this stuff going on?
I think on tendering processes on the RFP, it's up the top rather than at the bottom, because IT type and security questions were these sort of also ran questions or came after the event, because I think the thing is, when you take on a platform, you take on its functionality. They're not going to change it for you. You know, you're buying the commodity. So I think you might find the precedence of security over price featuring in the various tenders that you see. If you pick the cheapest one, there's going to be a reason, you know. I think, you know, it may well be that that's where the spend's not going. And it also, I mean, some insurance companies, they're modernising, but it has taken them a while to get into the right place in terms of IT security.
Any other questions? Chaps, I don't know if you wanted any last comments before we wrap things up.
Well, no, I'm pleased actually that the swingometer went in the direction I'd hoped it would. Because I do think, as I said, at RSM, we're trying to raise profile here. You know, I'd love it if some of you would fill in the survey. I've left some copies over there, and help yourselves to last time's report. Because I think in terms of our role as advisors in the industry, that's all we can do is raise awareness and help in terms of improving the controls that you have. So hopefully today has helped to demonstrate perhaps some weaker areas and some things to think about.
Yeah. Just to make people aware, and hopefully you are aware, but you can pay people to penetration test your system. £1,500 to £2,000, they will attack it sort of voluntarily with your consent, as it were. So if you're worried about where you are, it's probably a good point to start, because you'll get a pretty full and frank account of what's going on for that amount of money. It's probably well worth doing if you haven't done it for a while.
We've just been asked to do that for a trustee board to try and hack into their system through a TPA, which is the first time we've been asked to do it, but that board feel actually they have concerns and they want to see actually would it be possible. So we have a team of people that go and sit outside in a car on their laptops, get onto the Wi-Fi, and then see what they can do. Nice job, really.
And on that note, I think we'll bring things to a close. So thank you for those in the room and those on the web streaming for participating in the session. If we could thank our two speakers, please.